Welcome back, Alpha Hunters. It is a terrific Thursday. We are halfway to, July 4th to the next July 4th, I guess, from the last July 4th. It is January 4th. So, happy half Independence Day to you Americans out there. All right, so we didn't really have a gap all that much today. Like a little bit of a gap down, nothing crazy. It wasn't really a big deal. But we did see the market kind of try to pump yesterday in the second to last hour of the day, and then it didn't hold, and we came right back down. The last hour kind of ended on the lows of the day. Now this is what I'm watching. This is going to be very important because I'm going to be watching how we get to kind of our close today and where we kind of close today is going to be very important because I do think the market is setting up for a pretty good volatile day very soon. Either Friday or Monday. Maybe we see some of that kind of start to kick in by the close today. I would kind of doubt it. And I kind of hope it doesn't because I'd rather us not break down yet. Not break down yet. So, yeah, we're going to talk about some of that. Let me just run through kind of the five major ETFs. But yeah, pretty flat open. Traded higher for the first 2 hours, and ever since we've basically been trying to pull back. Not rapidly dropping off here. We've had 3-4 days in a row of selling. Kind of flat here. We're not really seeing great buying action, really at all. The best buying action we saw was on January 2nd, right there at the end of the day, last 15 minutes, and then we got below that on Wednesday. So I guess you can say this morning, first 2 hours was pretty good. But yeah, we just haven't seen a lot of strength out there. So yeah, kind of been a problem. Anyways, Q's a little bit more of a gap down here. Talking about the SPY gapping pretty flat there. Q's gap down roughly about 0.5%, not quite. Also, they did a nice little 2 hour run, and then they've been kind of just barely negative here the past couple hours, just kind of bouncing around, just negative of the close of yesterday. Apple, you can see Apple here on the right side, down 0.75%. So yeah, that's probably weighing a little bit on the Q's there. IWM positive, up 0.25%, pretty flat open there, kind of just choppy throughout the day. DIA, nice little gap up. They traded higher for 2 hours, pulled back, still been positive all day, looking pretty good there on the DIA. DIA continues to be one of the market leaders. And yeah, there you go. DIA doing its thing. RSP, nice little flat open, traded higher. It's kind of come back down pretty flat. All right. Kind of all the markets kind of look very similar. About the major difference is the gap. Gap down on the Qs was a little bit more than the others. One thing that's going to be really concerning here is, as we kind of talked about yesterday, we got pretty close to the 20 EMA here on the RSP. We got under the 10. Kind of looks like we're retesting into that 10 EMA today. That doesn't set up well for very soon, maybe a Friday, Monday breakdown. Okay. The DIA, not quite breaking down, but obviously if most of the other markets it'll break down, this will get below the 10 EMA most likely. But throwing a nice little upper wick there today. Yeah, all right, that's the DIA on the daily. IWM. So past 2 days, the IWM got below, or the previous two trading days, got below the 10 EMA on Tuesday. Yesterday, Wednesday, got below the 20 EMA. Hasn't quite filled the gap that we had back from December 13th. And throwing a very little upper wick right into that 20 EMA today. That looks pretty bearish on the IWM. So, and we have a pretty large pocket here back down to the 50 EMA here around 188 or so, 187.50. So yeah, I mean, we could set up for, it looks like we're trying to set up for a pretty volatile day here coming soon. And we got the Qs also throwing up her wick, a little bit of a lower gap there. This, I mean, none of this thing's just seems like it's in the middle of nothing as far as the moving averages. Maybe we come down, bounce off of this level around 393, where this high was back on November 27th or 29th, right? That was the 29th, yeah, 29th. But I would imagine it probably goes a little bit lower, hits a little bit more of these tops on the dailies, and that would also be where the 50 EMA is coming up. Okay, so the SPY. And the next thing I'll look at is the VIX, and then I'll kind of give you why I think we're setting up pretty bearish here very soon. So obviously we got a nice little upper wick coming in today, retesting to that 10 EMA. We're hanging on to that 20 EMA. We're not really bouncing. We haven't seen a lot of strength come out of the market. We haven't seen like a great flush, even though we've been bearish here for the past, several trading days. It's man, I really want to see how we close today. It wouldn't be bad to layer into a bearish position now, because if we do roll over at the end of the day, at least you would be in, and then we'd probably just continue tomorrow and or Monday. But I mean, that wouldn't be a bad idea. Anyways, let me take a look at the VIX here. So this would be the other thing that kind of wraps into this. So the VIX, we know, we kind of talked about yesterday, got this little like inverted head and shoulders kind of forming out here. Got a shoulder, neckline, head, neck, shoulder. We're kind of right at that neckline area, and we're still rising. Got a little bit of an inside doji candle coming in today here on the VIX. This thing looks like it is about to break higher, break this neckline, and if it does that, that's going to be we'll probably have a spike here on the VIX. And I'm not saying we're going to like 20 or anything like that. I'm, definitely not. But it'd be like getting up into the 15, maybe over 15 type of move on the VIX. And what would coincide with that is a breakdown on the SPY. Now, if we did see that, that would be something that would, you'd see a pretty good breakdown. Now, if I go back to the SPY, this is where we're sitting right on that 20. And if we get below that, I mean, we got a large pocket here back down to the 50. Okay, so from our current price level down to the 50 EMA, that's about 2.33%. So there's a pretty good spot in here where we could see the volatility, break that inverted head and shoulders neckline pattern, and it spikes there on the VIX, right? On the VIX, breaks this like 14.5 area. We get a spike up, move over 15, and that would probably coincide with the SPY probably moving down. I would say to at least 463 or less. And if we did do that, I wouldn't want to be bearish. You're just going to let it run. I would play this bearish here. Once we got the breakdown, I would probably, take it off for whatever you're looking for. And yeah, I would see how this sets up later on. I don't think we would see much more bearishness over the next 2 weeks. I really don't. I think we'd probably be maybe more choppy, probably a little bit more bullish than over the next 2 weeks. But the market is setting up to have a pretty bearish move here, either Friday or Monday, or maybe we start the rollover this afternoon. And kind of looks like maybe we do. I don't know. I'm kind of hoping it doesn't, but I can understand, layering in a little bit of a bearish position here right now, and then maybe doing it closer to the end of the day as you can kind of get a better idea of where the market is going to close. Because if we end kind of where we are, man, I would say anything below 469.80, it will definitely set up pretty good to be bearish here over the next 2 days. Anyways, it's kind of just what I kind of wanted to bring that up. That looks really good, and you haven't really talked much about wanting to be bearish or anything like that, or bullish. Definitely just not bullish over the past couple of weeks, but this is a trade that you definitely, these are the ideas you're looking for, right? You want to see kind of how some things set up. VIX is still staying kind of compressed at some of these lower levels, but it looks like it's about ready to break out of this kind of rounding bottom here. You kind of got a cup and handle as well. Where's the marker? Where's the brush? There we go. You kind of have a little bit of a cup, and you got a handle. So I would rather play this for the breakout of the VIX, which would be bearish on the SPY, or you can play the bullish VIX here. And then yeah, at that point in time, I would just be like, yeah, okay, we've moved bearish here for like almost 5 days, depending on how we close today. But let's see, 1, 2, 3. Today would be 4. If we close bearish today, it'd be 4. Most likely, if we did break down tomorrow, we'd probably close bearish, but I would imagine that would be the probably end of this move that we've had going on since late last week. So, all right, I'm gonna keep moving on. Dollar. Take a look at the dollar. This is another thing that could put pressure on markets, right? You see the dollar we've based out here at the end of last year, last week. Moved higher yesterday, got a little bit of a lower wick forming here at a pretty good kind of resistance support level that we've had before back at the end of November. So yeah, I mean, if we see this move higher, the dollar move higher, the DXY move higher, maybe tomorrow, Friday, Monday, this would be another thing that would probably be bearish for equities. So yeah, definitely another thing you could see. GLD kind of just hanging out. Yep, dollar's hanging out, GLD's kind of hanging out. All right. It makes some sense there. I would still just rather be buying this on any kind of pullback. I wouldn't want to be leveraged buying. I would just rather be longer term exposing myself to it. 10-year yield, nice little move higher today. Yesterday, dollar is moving higher. 10-year yield not really doing as much. Kind of had an upper wick. One reason why I put this horizontal line on the chart yesterday is that was right where these two upper wicks were. And kind of mentioned if we get back over these two upper wicks, because obviously this was a pretty good resistance spot because it failed at this level 2 days in a row. But now you can see we're climbing to that level, right? We're about to close at these upper wick spots over the previous 2 days. That would be something that might get the market kind of nervous, right? If we start to push back over these upper wicks, because then this looks like a pretty good basing pattern. Maybe we're going a little bit more of a run. Also, we'd be over the 20 EMA. Maybe we're going to make a run to the 50 EMA, which is kind of it would be around the 4 maybe 1.5 area here over the next day or two if yields climbed, 10-year yields climbed that high. So, yeah, that was one reason why I did put that horizontal line there, because if we got over there anytime soon, it's going to be kind of tough for the market. 10-2 inversion, climbing a little bit today. Nothing crazy. We do know we got an upper wick, false breakout there on the 10-2 inversion. All right. Looks pretty good. Still kind of in this little bit of an uptrend that's been in over the past couple weeks. Hasn't really broken that down yet. But if we start to see this bounce, we don't take out this upper wick from a couple days ago, and then we roll back over, then it starts to set up into this choppy sideways pattern. So here over the next couple days, if we see this thing continue to run up and get over that upper wick, then yeah, you can say that we're probably just in another uptrend here on the 10-2 inversion. HYG breaking down. Yields are up. HYG down. Makes sense. Okay. Obviously, you got a pretty good pocket here down to the 50 EMA. Obviously, a pretty good consolidation about the same spot. That's about one of the last times it consolidated back in late November, early December, before it went on a pretty good run. So yeah, HYG has a pretty good pocket there. It's also kind of where these tops were back in the summer. So definitely has pretty good room to run down. So we could see a lot of things kind of happen all at once, right? Yields break higher, dollar breaks higher, VIX breaks higher, and that would probably just be bad for equities. It would just be a complete mess for equities at that point in time. You obviously got the LQD also getting below that 20 EMA, not 10, 20 EMA today. Bounced pretty good yesterday, but gapped down below it today. Obviously, you've got a pretty good pocket here back down to the 50. Let's check that TLT. Same kind of deal. It's kind of just under that 20 EMA. They bounced pretty good yesterday, but yields throughout the night look like they climbed, put pressure for bond prices to open lower today. They haven't really done too much intraday, but they definitely opened lower today, and you got some pretty big pockets in here to move down to the next major, moving average, which would be the 50. And that's going to be a pretty good rejection off of a pretty solid support and resistance level, right? We bounced there 3 times last year. You can maybe count it 4 times if you take into account that May kind of time frame. So, once we broke down that back in July, that's when we saw the market get really, really scared. Kind of went on a multi-month kind of bearish move there. So, all right, let's check that sector rotation, kind of see what's moving. So, sector rotation for the day, energies, which has been pretty good to start out the year. Tuesday, Wednesday, energies were doing very well. Today, not so much. Looks like they're giving back quite a bit. Discretionaries, tech, communications, kind of all wrapped in there. Materials, kind of all lumped in there together. Underperforming. Real estate, utilities, underperforming. Okay. Staples, industrials, financials, and healthcare are the only sectors outperforming on the day. Okay. That's good to know. So, energies, underperforming. All right. Financials look like they're doing pretty good. They've been doing pretty good, kind of start the year. All right. Taking out the gap. Man, wow, look at that move. So, taking out the gap, you can really see that energies intraday have just absolutely gotten shredded. They have gotten taken. They got taken outside and spanked. All right. Communications, materials, tech, discretionaries, utilities. I mean, a lot of that's kind of all lumped together. Industrials, all underperforming intraday. Financials, barely underperforming right there. So there's only 2 sectors that are really outperforming on the intraday kind of time frame. That's really just staples and healthcare. And there really hasn't been a whole lot of optimism out there. Really all that much. Okay.